very happy to kick off the second half of the next forum. This one will be a topic around embedded banking, and we have some great panelists here. But first thing I wanted to do was, wait, what's that back there? Oh, that's the elephant in the room, which is embedded banking has taken quite a hit over the last 12 to 18 months. There's been an evolution, there's been changes. It's kind of going through, I like to say, the teenage years, you know, a little risk. We're here in Atlantic City, so a little gambling. But there's still a great opportunity, a ton of upside. And we have a few panelists here that completely understand how to do it correctly. Co-moderating with me today is Jeff Nowicki from Treasury Prime. Very happy to have him here. So I guess, Jeff, if you want to give a little bit about your background, and then we can talk to the panelists.
Sure. So I'm our Chief Banking Officer at Treasury Prime. What we do is we're an embedded banking operating system for banks and credit unions. We've strived ourselves on being able to give the banks the full control and oversight as if they would if someone walked into their branch to the end client, but affording the opportunity to extend out to new audiences through different brands or affiliates or fintechs or other partners. So that's Treasury Prime. I've been with the company for almost 4 years now, and before that I was in probably a lot of your seats on the banking side, building out programs like embedded banking, banking as a service before it was really a coined term. Spent a lot of time at Radius Bank before the Lending Club acquisition, and then a few other community banks in Boston area. So happy to talk to any folks after the panel. Looking forward to it. Robert?
Yeah, I'm Robert Keil with FinWise Bank. I'm the Chief Fintech Officer there. I got my start in banking. It was actually September 1st, 39 years ago, over in Europe, but have been in the US for a while and been in payments and banking since the late 90s. And at FinWise Bank, I'm responsible for the bank's partnerships with fintechs that for the last 8 years were focused on the lending side and now also on card sponsorship and embedded payments.
Hi, my name is Stan Orszula. I'm a partner at BFKN. We represent probably over 300 financial institutions from corporate, M&A, regulatory, exec comp, banking as a service, embedded finance. And my path, I sort of fell into banking a long time ago. And after a stint at the FDIC, I returned to private practice where I focus on helping banks with their third-party relationships, specifically tech-forward banks with fintech partners and offering banking as a service and similar types of things.
Hi, I'm Emily Reisig with Emprise Bank out of Wichita, Kansas. We're a community bank that ventured into the embedded banking space in about 2020. I've been along that journey since then, from idea conception to now a business line that we call Emprise Embedded. I lead the strategic partnerships within that division, both with the prospective non-bank partners that we might sponsor, but also with the tech partners that will get us there.
Great. So as you can see, we have some experts on the stage, and to really level set, because there's a lot of different terms, BaaS, sponsor bank, embedded, level set for the audience. What is your definition of embedded banking? I'll start with Robert.
Yeah, good question, right? And it seems the definition is changing sometimes by the month, but the way I look at it is it's a departure from the traditional banking model where you had a customer, may it be a consumer or a small business, walk into a branch or go onto the bank's online banking platform, but instead take the bank and the various payment solutions and embed it into an ecosystem where the customer can access the banking services when and where they want it. And so that obviously necessitates the use of technology because without that it doesn't work, but that's kind of how I define it in my mind.
Yeah, I think about it, it's meeting consumers where they are and their growing demands and expectations on where they would expect to see financial services or just the experiences digitally that they're encountering. Something my CEO has said often that I think about in this question is no one really wants to bank. They don't really want a mortgage. They want a house. They don't want a savings account. They want a vacation. In this instance, we're enabling consumers to have access to something. We're a means to an end. And we're doing that with innovative tech companies that are thinking and solving problems in those spaces where they believe financial services can play a role to enhance that experience.
And I would also say it's a way to expand your community, especially if you're a community bank. You know, that in this age of fintech and tech-forward banks, your community is not just the affinity group that your bank may have started with, or not just the geographic area, but it's a way to expand it to that community of consumers that are looking for an experience or an item like that.
Yeah, and for us, for a community bank, in the Kansas area, this gives us access to end users outside of that geographic footprint that we would have seen otherwise, and instrumentally allows us to have access to a broader group.
Yeah. Next question for all the panels, but we'll start with Stan. You work with a number of banks as they're getting into this, and they're venturing or maybe testing the waters on embedded banking. What are the first couple of things that you talk about and you work with the executive team on?
And I think that's a good question, because even though there's been a lot that's been going on in the space with consent orders, middleware bankruptcies, recent regulatory pronouncements, and sometimes that scares people away. I think the first question is not to do banking as a service or embedded finance, to improve your balance sheet for the sake of doing it, is to do it with a purpose. That, for example, we have some banks that are already they have a certain expertise in a niche area. So a lot of times, whether it's embedded finance or whatever, whether it's a lending product or a depository product, there are fintechs out there that do similar things. So your bank already has that knowledge, so you can supplement that knowledge. So, I see it more as just a natural extension. If you already do something and you probably do it really well, it's a natural extension to do that. So I think the first question is not to do it for the sake of doing it, but to do it to fulfill, a purpose and to grow. And also, I think you have to start at the top. You have like a senior leader or senior management thing. And besides getting the right tech solutions and having the right people to do it, I think you also have to have to get your board into it. And sometimes I think it's helpful to have a bank board that you at least have one sort of tech forward voice on it. So that that they're able to understand what you're doing, then it's not just a big black magic box.
Yeah, I think that's great. Emily, Robert, anything?
Yeah, I would say the same thing. It starts from the very top and getting buy-in there. It's also the long-term commitment and long-term vision. I know Robert and I see the world the same way, in that this is very long-term and where we're headed. It's not a short-term earnings goal. It's not something that you just manage quarter to quarter. And once you're in it, you have to align around that long-term vision and make sure everyone else understands that it might be a while before you see the ROI that you're expecting and the kinds of investments you're making. The panels leading up to this panel hit home, because it's talent, it's tech, it's process, it's people, it's a financial investment, it's a capital strategy on how you'll manage and scale that growth. There are a number of attributes that have to be considered to step into the business. But it's absolutely attainable to start somewhere, like Emprise has, and build for that long term.
Yeah, maybe the one item I would add to that is, and that's maybe where sometimes some strategic mistakes were made, right? Because you go back a couple years and you had conferences like this, and there would be someone saying, this is the easiest way to grow banking, right? Just be a sponsor. But the reality is that sponsoring non-bank entities is a high-risk activity.
Sure.
That's what it is. So that's not necessarily bad. It just means you have to spend more resources to control that risk. And so that means for any bank going into this, there has to be a meaningful commitment on the capital side. I think I mentioned in preparation, I've talked to a couple of banks looking to get into this, and for whatever reason, a number of them picked the $250,000 range. Do you think that's enough to get into it? Usually it's like, that's not even enough to hire a knowledgeable person to head it up. And so there really is, it's literally several $1 million investment in getting the right people with the right expertise, the right technology. And that means you need to have a board that's on board as well, right?
I think that's right. I think that's a really good point. I mean, no one out here would just raise their hand and like, okay, I'm going to get into SBA lending without hiring a lending team, or you're not going to launch into a new business line without staffing and having the right people in place. I think this is exactly the same conversation.
And I wanted to follow on what Robert said about being a sponsor bank. Definitely in the past, the sponsor, it was a fintech's market, and I think that's changed. And I think finally on the regulators, you've seen some of the recent pronouncements, like their RFI that all the agencies put out in July to get for information on that they're really viewing sponsors as an extension of the bank. And I think that's giving banks, quite frankly, a lot more power to shape these relationships, going forward. Whereas in the past, you had fintechs that were flush with VC money going around trying to find the best bidder, and a lot of times that didn't work out because the banks and the programs were mismatched. But I think it's definitely a lot more helpful for banks that they're in the driver's seat. To downstream those expectations and make the fintechs adhere to it.
Yeah, and in our calls we had leading up to this conference, the constant question that came up was, what are you trying to be? What is your focus? We can start with Emily. When you've been at Emprise for a while, you've seen the evolution. You've seen Whitney come in and run the embedded banking division. That strategy and that question, did that come up often in the beginning?
Absolutely. And you think about what is it you're building to be, but also when you talk to all the prospective fintechs that are looking for a sponsor bank, you quickly have to make that decision of also where are you playing? What is our purpose here? For us, we see the benefit of growing our balance sheet. We also see fee income that can be very strong in this business to grow our bank. And then you think about the products that you'll deliver. It's really endless out there and where you could play. I think it's important to have the clarity and focus as you go and step in to build it, because you will have to be disciplined in saying no to so many spaces and so many opportunities because of the risk and the people infrastructure it takes to build it. It's imperative that you're not spread too wide and broad, and instead are focused on what you're doing well within those products. And what I would tell other community banks to step into it is think about what is it you're already doing well? Where is an industry or area that you've served that is maybe unique to you, or where you have some strength in that risk team and in your business development team that you can then lean into this fintech space? That's a great starting place before you kind of reinvent entirely new business line for the bank.
Yeah. Robert, I know that it's something we've talked about. FinWise has a little bit of a slightly different approach where you're trying to take on kind of both sides of the balance sheet and stuff like that. You want to talk a little bit about your journey?
Yeah, sure. So, the journey started many years before I actually came to the bank, right? And the usual course of a sponsor bank seems to be they start with a deposit product, maybe prepaid, maybe debit, and maybe move to credit card, and maybe into lending, not involving cards, because they're increasingly complex. FinWise, for whatever reason, started with the most complex, which was third-party lending through a fintech partner, and build a very strong business there. But lending, like everyone knows, is feast or famine. So it really makes it very difficult for the bank to predict what are we going to have in revenue and all that. So there was a need to diversify the income stream and monetize relationships with fintech partners in more ways than one. And so that is what led us to use the infrastructure we built for third-party oversight, tweak it a little bit, and now start overseeing card programs. May it be credit card, may it be debit or prepaid. And we then, in the process, also cracked the nut on working with a partner that will bring deposits to the bank that then we also can utilize for their lending solution, and allow them to have, to some degree, the benefit of the lower cost funds that often a pure fintech lender that only does lending doesn't have. And then to diversify a little bit further, we built out our embedded payments platform, where we can take basically all the payment rails like RTP and FedNow and Visa Direct and MasterCard Send, Visa B2B, et cetera, make those available by API so they can be embedded into the systems of our partners. So that means for a lender, depending on the endpoint, they can fund a loan instantly on a weekend after hours. They can collect the loan payments in more ways than one. And that way we can monetize existing relationships better. We attract more lucrative partners because it's a more robust solution. And because deposit products, credit products tend to be somewhat counter-cyclical, we kind of even out some of those fluctuations where, okay, lending is down a little bit, but then the activity on the deposit side increases, the fee income coming from debit products makes up for that. So it gives us more stability and predictability.
Yeah, and I wanted to go to Stan. You work with lots of banks. We work with lots of banks. The common denominator that we see, Travillian, is the talent that these banks, embedded banks, bring in. Case in point, Robert here, who we placed at FinWise. And we work with Emprise too. And really, you really have to get that leader at the top who understands it like Robert, but also it has to trickle down the whole team.
Yeah,
Compliance and
absolutely.
risk across the whole board.
Absolutely, because a lot of times, if you're doing embedded finance, the BSA person, it's a different set of skills. It's a discrete set of skills versus a general, BSA person. And I start off with that as an example. But also too, you have to have a combination of someone who's tech savvy, but also has some regulatory sophistication in there. And we've seen, at banks, the successful successful people in that space. We don't do the placements. That have some that worked at an agency or have had some specific experience at, say, with the consumer product, they worked at a consumer specialty lender, for example. But it's identifying that talent and building it up and to. Robert sort of made this point earlier, you have to walk before you run, wherever you start, whether you start with a deposit product or a credit product, but you have to, build up that knowledge base. By really, you can have the best technology, you can have the best vision, but you also have to have the best team underneath that too.
Well said.
Yeah, and I think that's all right. And Robert, you and your team have been incredible in transforming the whole bank and doing focus on the fintech side of the house. But I think it's just as important to understand that banks out there don't need to completely go all in on a wholesale change of your entire bank. Look at this as a potential business line. And that's something that the Emprise team does really, really great. And that's something that Emily's been talking about a lot. So would love to kick it over to you on how you guys think about it.
Yeah, we very much still have a strong retail network of branches in the Kansas area, a very strong commercial business. We have a wealth and trust division as well. And I think of Emprise Embedded as a fourth business line. We're a fourth P&L. And we very much have approached the development of that business as complementary growth mechanism for the rest of the bank. And managing the same culture, the same values. As we talk about talent and hiring, that's been important to us as we hire direct staff to build up the Emprise Embedded piece. We've done it from the top. I know that Travillian placed Whitney Weike, who I report to on the executive team, but even down to direct staff in ACH and wires, in a BSA compliance officer, across the whole program. Those that have managed card programs in greater complexity. Over time, as we've built this business, we've stopped borrowing from the core business and have built the talent that is a direct team. There's really its own engine growing and building this together. And I think about it, it's not just the experience that you look for in talent and hiring, that understand the nuances of this space. I like what you said, Stan, about the maturity and being able to speak in the regulatory acumen that's needed, not just their knowledge, but to be able to be in these spaces and these conversations. It's also the ability to build. I think Barb and I were having this conversation last night about those that are operating. As you think about Emprise Bank, it's been a community bank for 3 generations in the Wichita area. And we had a number of great staff that can operate a bank the way they've seen it done for decades. When you're asking them to build net new, you need builders. You need people that will come in and kind of advance it to the next stage and think about the new components of tech, the new components of process, the new components of risk management. And that's exactly the way we've approached it as we've built out the business.
Yeah, and as we talk about technology, middleware That's a word that's been beat up over the last 12 to 18 months. We have a middleware company next to us, Jeff, and then in-house building. A lot of banks aren't going to be able to build it in-house, hire engineers, hire data engineers. So partnering with a Treasury Prime is the first step for them. Can you talk about kind of the difference between the two, and also how a Treasury Prime, Jeff, can partner with an Emprise or other community banks to get started?
Yeah, just like I think there's a few key things. There are a few things the bank can and should never give up, and that's your oversight. It's your control of the end user and client. So no matter what path you pick, that's your foundation. But there's absolutely partners like Treasury Prime and others out there that give you new modern access and tools to be able to deliver your product suite out to a new business through other brands or affiliates that give you that same control and access. And that's what we do at Treasury Prime. But that's where you should start. Make sure that you get that and you have that. And if you do it that way, just because you have your client sitting on the FIS or Fiserv or Jack Henry cores, no one's ever said to you those aren't your clients or you're not controlling them. So there's very much a similar path here into this new business line, as long as you build it and you think about your controls and your access properly. Full disclosure, Emprise Bank is a partner of Treasury Prime, and I'd love to kick it over to you on how you guys think about that.
Yeah, I mean, that's 100% how we've made that journey. You've heard the previous tech panel talk about cores. We're all, of course, familiar with the challenges of cores. When we first had this idea of stepping into this space in 2020, some of the early investigation was around how could we use our core, what's possible. So we did a trade-off study of both how could we do this business with the current tech that we have, and then what are the options in the market. And so that's when we landed on partnering with Treasury Prime to bring our first program to life. Having those tech partners has been very important and valuable to our strategy. It's been a foundation to it all along. We are not a team that has product development in-house. We don't have software development in-house, but we know how to manage risk. We know how to run a bank, right? And we know how to manage the ledger and the tech partners that we have within FIS. I like the comparison. That's how we think about it as well. And now we just have a couple of additional ledger partners. Where we have invested in the pieces we do have in-house is the data infrastructure, because you now have data in a number of places, and so we do have a pretty strong and deep team within data engineering all the way to data scientists. So instead, that's been where we've made our investments. And then we partnered on the tech ledger side, both with ledgers and card processors.
And one thing that I think you're going to see in the next few years is banks, like tech-forward banks that are doing this. And I know there's limitations. Someone had a great quote this morning about a core processor, of banks being a franchisee of a core processor. And I say that because that can limit sometimes what your bank can do. But as you develop these alternate ledgers and other ways to aggregate your data, I think there's going to be a market to monetize that data going forward. Monetize it in the sense that you're better able to reach and target customers, and then also without going into privacy discussions on privacy of data, but there's ways to monetize it by selling it, by aggregating it and making it anonymous and selling it. So I think there's going to be some unintended good side effects coming out of that.
Yeah.
I think that's right.
And maybe if you don't mind, I'll add one other item that has become very clear for us, right? I mean, technology is needed to support the needs of fintechs because when you look at the traditional core 1990s technology, COBOL-based is not it, right? So you need something more modern. May it be in-house, may it be external, but there is another side effect of that that's very positive, and that is that as a bank, if we so choose, we can support some very unique use cases ourselves, right? There's nothing that says we need to have a fintech in the middle that program manages something. If we have the right technology at our disposal, there's nothing that prevents us from actually just having a more creative tool or creative product that we can get out in the marketplace and create some differentiation. And that's a huge side benefit that sometimes goes overlooked. It gives you options. It gives you control.
Adaptability. Yeah.
Absolutely. A little bit of a changing of subjects here. Earlier today, one of the panel sessions talked about some of the comments and new proposed rules by the FDIC. Could be banking as a service or embedded banking killers. All of us on stage don't believe that, I would imagine. So would love to kind of kick it to each one of you to talk briefly about the things going on from the FDIC that are coming out recently, and how you guys are talking about it internally. Stan, you want to start?
Sure. And I'll try not to monopolize. I have a lot of thoughts on that. So, as I may have mentioned earlier, there were three things: the RFI that came out in July, the interagency one, the FDIC rolling back its brokered deposit rules from a couple of years ago, and the last thing is a proposed rule that banks that have FBO accounts, whether it's through a Fintech or other third party, that they have to have daily reconciliation. And a lot of it, just in 20 seconds, a lot of this has come from a bunch of consent orders, mainly BSA related against certain banks in the Fintech space, none of the banks here on stage, just to be clear. And then also from a recent bankruptcy case of another middleware provider, where it's one bad player sort of spoils it for everything. Where this player involved in that matter on behalf of a bank, where they did some not so great things, and it really sort of woke the regulators to, of course, react. They weren't proactive, and we've had, it's funny, a couple of years ago, as banks started up their Fintech programs, we would go along with the bank and speak to the regulators about the products, and a lot of times it was the bank educating the regulators about the products, and it seemed like it was always a reaction. And I think what you're seeing right now is a lot of reaction to what's happened. And I'll use the broker deposit rules about rolling them back. That's not going to change or help anything in the Fintech space, because the original rules really don't apply to it. And I would even argue that if you have a deposit-based Fintech banking as a service relationship, those deposits, aren't contemplated either really in the new rules or the old rules. And quite frankly, they're a lot stickier in so many ways than brokered deposits. So that's just one example. But now you are seeing that the regulators are catching up. So I do think that, again, if you're looking at this space, reach out to there's several trade groups out there. Phil Goldfelder was up earlier. There's other ones out there too. It's a chance that if you're interested in the space to make your voice heard, also through your state banking associations are also effective vehicles, for that. But I do think, if you have a chance to comment on these rules, it's perfectly appropriate to do so. And it's also another chance to educate, the regulators on what's going on. And I am hopeful that they will, that there will be a chance that they will be educated, and you just don't get the response that we don't like it. And hopefully, going forward, that they'll understand that, hey, it's 2024, and this is sort of a fact of life, that there are going to be these third-party relationships, and rather than not say to do something, provide some more prescriptive guidelines rather than broader templates that leave everyone guessing.
Yeah, I would double down on that, and I appreciate you calling out Phil's association. We're a member of the American Fintech Council and Alloy Labs Alliance, and in both forums and in less organized forums, you're seeing banks that are in this space lean in together and have conversations about how we carry this business forward. What are you hearing from your regulators? What are components that you're worried about or changing? And I've seen that more than ever in the last 9 to 12 months. It's been fantastic. And to me, it's a sign that this is not a killer of the industry. Instead, you're seeing the regulators lean in, listen, learn with us finally, because to your point, Stan, we've been in some rooms where we were doing the teaching, which is unfortunate. And I think it's needed. The more prescriptive guidance is necessary, right? If you want to drive a car quickly, you need brakes.
Yeah.
And we're here to help build some firmer brakes on this vehicle.
And real quickly, I just want to add, you know what I've seen that's great, and this has been really organic. I've seen peer-to-peer groups of banks that are competitors in the space that will get in the same room, Chatham rules, and they'll get in the room and have a frank discussion, and it sort of elevates everyone. And it's not just for the banks that are neck deep in the space, but also welcoming to the banks that want to test it out and learn more about it.
There's a ton of that in the space, and it is fantastic. We've had the benefit of learning from those that are ahead of us in the journey, and we're doing the same for those that are stepping into it for the first time.
Yeah, Robert.
It's very true, and I'll add, maybe one or two thoughts on what do we think about everything going on with the regulators. You could ultimately argue that the more things change, the more they stay the same, right?
Sure.
Because when you look at all the different consent orders that have hit banks in this space, there was one that was kind of techie-like, right? Improper model validation. The rest is all basic banking. Mm-hmm. Do you know who you're dealing with? Mm-hmm. Where's the money coming from? Where is it going? Yeah. Are you reconciling, right? It's just a matter of how do you take those basic principles and apply them in this setting. And that's where corners have been cut. But and I think it was Barb who quoted Gretzky, right? The skate to where the puck's going to be. If you take those basic principles and look at it, the fintech's customer is not the fintech's customer. It's my customer. The fintech is a vendor of the bank that services the bank's customer. And then through that lens, you look at, okay, do I know who I'm dealing with? How do I make sure that I know who I'm dealing with? And do I have controls that if something is wrong, I push that red button and things come to a stop? If you do that, you're okay. And so from that perspective, yeah, it's somewhat of a nuisance because you get more scrutiny right now from regulators, but in the end, it's not really something that's brand new. It's just how do you take these principles and apply them in this setting?
Yeah, great advice. As we wrap up here, I'd love to ask this question. There might be banks in the room that are, well-established, sponsored banks, embedded banks, but there might be a few in the room or might watch this later that are thinking about it. What is your advice for banks looking to take that first step? What's that first step? Heard it on the news, embedded, what is that first step? I'll start with Emily. Any advice for the crowd?
Yeah. With anything, I think get back to your why. Why are we doing this before you step into it and hold firm to that purpose? You need to have reason, again, to the long-term vision. And so I would double down on the purpose of what you think it'll drive for your bank and then lean into what that means and what you need to build out.
And I would say after that, once you figure out the why, make sure that your bank and I hate to use another football analogy, big football weekend, is if your bank does the blocking and tackling of banking well, make sure that in this area, especially in this area, that you're able to do that before going on to the next step.
Yeah. And I'll pick up something that was mentioned earlier, and that is that the banks in this space are very, very collaborative, and I think that's for good reason. For banks that do this right, fintech relationships can be the goose that lays the golden eggs, right? But we need to make sure that the goose is well fed, and right now there's definitely an imbalance. There's not necessarily enough banks to meet the demand, and so that's why I think there's a lot of collaboration, helping each other maneuver this, because if we starve the goose, we all suffer, right? And so that's why my advice would be, if anyone is looking to get into this space, reach out to a couple of the banks that have been in this for a while, that have maneuvered the difficult landscape pretty well, and just brainstorm together, right? I mean, there's plenty of players that are willing to help and make introductions to the people they should know, and where do you go to hire the right people? Just as a footnote, eternally thankful to Travillian to introduce me to FinWise. So that is, I think, one of the best starting points. And then from there, you can decide, is it for me? And if so, where do I double click?
Yeah, the demand is definitely there. I think we were talking about before, when you go to conferences, you're the one, all the fintechs are coming to you, you could just sit there.
Turn over my name tag.
Yeah, they do. I mean, it's pretty incredible. But no, thank you for the panel. Nice round of applause. And as I said before, and I work with a lot of these banks, sponsor banks, they're very collaborative. They will answer your questions. They'll give you advice. There's demand across the board, and we need more great sponsor banks out there. So give them a call, give Jeff a call, and thank you very much.